We have been on a wild ride in the real estate market for the last couple of years. We have seen double-digit appreciation, we have seen some crazy inflation, and we are seeing interest rates on the rise. Some people are saying that we are definitely headed for a recession. Some people are saying that we're already in a recession, and some people say it's not coming. Some people say that we're headed for a crash, and other people say that values are going to continue to rise.
Now, whether you're a real estate investor, you're a homeowner, or someone looking to buy your first piece of real estate, the biggest question you have is how does all this affect the real estate market?
I'm Lauren Capwell.
I'm Juan Huizar, and this is your State of the Market.
Today, we're going to talk about how all of this is going to affect the real estate market, who is going to be impacted, and what you should do about it. Whether you should buy, sell, or hold.
Here at Sage Real Estate, it is our mission to teach you how to build wealth through investment real estate. So if you have not subscribed yet, make sure to hit the subscribe button and you'll be notified as soon as one of our videos is released. With that being said, let's dive into the video.
So for those of you who haven't been following, there are a lot of people out there who are anticipating a big real estate market crash. Juan, can you maybe help explain to us why there's so many people who are predicting a crash?
For those of you, just to kind of catch you up, we've had this appreciation in the real estate market. And I'm not just saying at the single family home level, we're talking at the multifamily level, at the industrial level. Pretty much, if you started investing in real estate from 2009, we've had 13, 14 years of this appreciation. And we know that historically, some people will tell you that every 7 to 10 years, we have to have a correction. So that's part one. How long could this appreciation in real estate continue? The second part is that we have inflation being a major problem. In fact, that's what's caused the appreciation. So cost of living is probably the biggest issue. When I look at the reports that bread is going up, milk is going up, gas is through the roof, prices are out of control, right? So that's an inflation, that's a problem. To combat inflation, the government has had to raise interest rates. That's kind of like the third piece of the puzzle that's causing all this, is that in January, interest rates were in the low 3s. Now they're high 5s. It's causing this panic. So those are the three issues. Now, what I really believe is going on is a lot of these folks in the last 14 years have sat on the sidelines looking at the market saying it's simply too expensive. I'm not gonna buy. Since then, everyone else has gotten rich. If you were able and willing to buy something, values have gone through the roof. Now they're hoping that this crash comes. And so today we're gonna be covering what we believe is really gonna happen. We don't believe in a crash. What we like to say, it's going to be a correction, not a crash.
So basically, to summarize what you were just saying, we've had a high level of inflation in the last couple of years. In order to combat that, to slow down spending, the government has been raising interest rates. And it's this raising interest rates that's causing people to think that we're headed for a crash because the buyers are going to go away. But we do know that historically, real estate is one of the best hedges against inflation.
Let me try to break that down for you. Inflation means that the cost of goods has gone up. In 1990, the cost of goods went up by 3%. Real estate values went up by 4%. If you're investing in a tangible asset, your real estate outperformed the increase in expenses. Let me give another example. In 2010, you had inflation of 1.8%. Real estate went up by 9.2%. Just recently, 2021, which I know this one will be a little bit of extreme, but inflation went up by 6.8%. Real estate values went up by 18%. This is nationally. So when we say it's a hedge for inflation, I think it does real estate a disservice. It supersedes, it outperforms inflation. That's how you protect yourself. That's how you have the control.
So for example, if somebody were to see the amount of inflation that we're having now and be concerned that that would cause real estate prices to drop, what would you say to that person?
Lauren, I'm not an economist, but if we go back 70s, 80s, 90s, these are historical trends. So am I making something up, or am I creating the scenario that we're not going to have values drop? I'm not. I'm simply basing it on data, and historical trends are going to guide us to the future. And so yes, the answer is I do not believe that we have a crash. Is it a correction? Fine. It would be okay if we go back to a normal appreciation, right? And like you said earlier, Lauren, we've had this massive appreciation. It's probably not healthy for the economy. It was hard for people to enter into the market. And now we might go back to what we call a normal real estate market. And what's wrong with that?
Since you're saying that we are not headed for a crash, but probably for a correction, the next question on everybody's minds is going to be, what is the market going to do? Is it going to go up, down, or sideways?
When you're a buyer, I keep hearing the word recession. What they really mean is, I don't really know what recession means, but I believe it means that values are going to drop. So that's one part. Interest rates are going up. What I believe is that real estate values are going to drop. For those reasons, maybe I should not buy yet. Maybe I should wait.
I think there's like a really important distinction to make here, because I think there's these two terms that kind of get mixed up with each other. One is a crash, which refers to a crash of the real estate market. The other is a recession, which is basically the entire economy, like all businesses, all industries slowing down. Just because the entire economy goes into a recession does not necessarily mean, and in fact usually doesn't mean, that real estate prices will go down.
By the time that we're filming this, it has not been officially announced. A lot of economists are saying that we are in a recession. It will be announced later this month. So if we are, what does it really do? Does it change anything? Not really. I mean, the biggest threat has been happening for years, and that's inflation. That means everything is getting more expensive for you and I to buy. From a psychological perspective, if you're a buyer, you have apprehension. Maybe you were motivated at the beginning of the year, or that first quarter of 2022, and now you hear it and you're thinking, oh my gosh, I don't want to buy something because I think that it might go down. Okay, so it does that to the buyer. I understand. I have those conversations with these buyers. To the seller, what they think. Oh my gosh, I was thinking I wanted to sell at the top. I'm afraid that values might drop. There's no such thing as the top. You never know when the top is. And here's what I want you to understand. Whether you're a buyer or the seller, the word recession just gives you fear. One believes that the values might drop. The other one believes that he might lose value in his real estate, so equity. And so there's a little bit of fear that goes on in this situation. But what this graph is going to show you is, out of the last 6 recessions, only 2 times did we have a dip in real estate values. In 1980, we had a recession. Real estate values went up by 6.1%. In the year 2001, we had a recession. Real estate values went up by 6.6%. When did it go down? 1991, real estate values went down by 1.9%. Is that enough reason to wait for real estate values to drop? If in 1991, real estate values went down by, call it 2%, that's not enough motivation for me as an investor to say, I'm gonna wait because I really want that 2% reduction. In 2008, nationwide real estate values dropped by 19.7%. For those of you who don't know the cause for that, it was bad mortgages given to people that probably shouldn't have gotten the loan. What we know for a fact is those types of loans are not given out right now. And so going back to what I said earlier, we're following trends. It's not our opinion. We're simply saying, in most recessions, real estate values continue to go up. So to answer the question, where are real estate values going? If in fact we're in a recession, I would look at historical data and I would simply say that the growth will be slowed. And if there's a correction, it will be a very small one. I know a lot of economists are now coming back and saying that in the end of 2022 into 2023, we're going to have a correction. Some are saying that the price reduction might go up to 5%. So that means they're not even sure that they're going to drop. That means that if they did drop, 5% is not a whole lot. But this is not a reason to wait, because a small correction is not going to put you in this great position from an investment standpoint.
To summarize everything that you just said, if we are headed into a recession, there's a really good chance that real estate prices will continue to rise, because that's what we've seen historically. So in all likelihood, even if the economy goes into a recession, we will still see real estate prices probably continue to rise. Maybe not at the same pace that they have been for the last couple of years, but we're still expecting them to go up.
Part of the problem is that people are simply waiting too long. And my question to you is, how long are you going to wait? Are you waiting 6 months? Are you buying at the end of the year? Or is that not long of a wait? Are we buying in 2023? Here's the reality. We had 14 years of massive appreciation. Did you wait during those 14 years? Was it too high for you back then? Going back to one of our mentors, one of our clients, someone that we actually interviewed, you could check out the video, is Brian McGinnis. Brian McGinnis, local Long Beach investor. And what he said in that interview is, I'm not smart enough to know whether we're up or we're down in the market. I will buy when the banks will give me a loan. Because when you're buying real estate, we're not buying for the next 6 months. We're not even buying for the next 3 years. If I were to ask you the question, what is real estate going to do 5 years from now? I want you to really think about that. Where is real estate 5 years from now? Because I believe that most people are going to say, well, historically, real estate has gone up. Are there some corrections? Yes.
If you're looking at real estate on only like a 6-month time horizon, that's kind of an amateur way to look at it because the real estate market moves very slowly. While we know something like the stock market can, on some crazy days, drop by 20% in a day, the real estate market's not like that. It's very slow moving. Things take time. So you can't look at the real estate market on a 6-month time horizon like you might look at the stock market. So the real estate market is something that really should be looked at on a 5 to 10 year time span.
When we interview these real estate investors, now these are people who've actually made it, people who've built wealth through real estate, people who now have cash flow, people who now get to retire and they no longer have to work because their real estate properties are giving them enough income that they don't have to go to work anymore. So when I talk to them, they will say, if I knew then what I know now, I would have bought more. All of them say it. All of them say it. They never talk about, well, that one time it was a recession. Well, that one time interest rates were high, but I still bought it. They never look back and say, I shouldn't have bought it. Because the one thing I keep hearing is, I should have purchased more. And one of the things we like to say here at Sage Real Estate is, real estate's not get rich quick, it's get rich guaranteed. So to wrap this portion up on whether you should buy, the answer is yes. What other alternative has historically done this well? It's a tangible asset and it's going to protect you in the long run.
Another thing you can do right now is hit the like button. Make sure that you subscribe for all of our latest videos. What do you think the market's going to do? Comment below. So we've talked about the buy side. Now let's switch gears and go over and talk about the sell side and who is going to be affected on the sell side by this market correction.
A lot of the owners that we speak with, they have tremendous equity in the property. They have cash flow, they're in a good position. Again, this was not year one, this is years and years of owning certain pieces of real estate that have got them to that point, right? So they're in a good position. A lot of them are maybe wanting to get out of property management. Maybe they want to move out of state. They're thinking retirement. This is the mindset of most sellers that we interview or that are our clients. A lot of our clients are what we call independent mom and pop apartment owners. So this is anyone who owns 2 units to like 20 units. Okay, so that's like the range that I'm speaking to. Those sellers are really not going to be impacted negatively. So we already know that some economists are saying that we could potentially go down by 5%. Okay, that's not a really scary amount, right? 5% is not really going to shake up the seller. Like that's not this massive loss. The seller is still in a position where they're collecting the rents. And what I said in my prior video was that rents never go down. And so they're still going to be collecting the rents on their property. So they're still in a strong position. If they were thinking now it's time to sell, now I want to be out of the business of property management, now I want to move out of state, now I want to retire, what's going to happen with them is that there's going to be more inventory on the market. So there's going to be more competition. So their property may not sell as fast. They may sit on the market longer and people might try to negotiate. But I'm not seeing a massive price reduction in the unit range of like 2 to 20. Where I see there being a possibility of maybe a larger hit for the seller is at the syndication level. These are people who bought hundreds, thousands of units, and they got riskier loans, short-term loans, and they banked a lot of their assumptions on rents increasing, which I believe they're going to increase, but maybe not at the level that they were thinking. When those loans come due, there might be a problem should tightening requirements tighten up a little more. That's where I see that specific seller at that larger portion taking a bigger hit. Going on to our next point with our clients, again, 2 units to 20 units. Is this a good time to sell? A lot of our clients are in a position where they have a lot of equity, they have cash flow, and they believe, why would I ever sell? I've accomplished my mission. Cash flow, I have equity, and that's where we come in, and that's where we're going to talk about return on equity.
So basically what you're talking about is return on equity, which is the measure of how your money gets lazy over time. The longer that you've owned a property, the more equity that you've built up in it, chances are that the return, which is basically the amount of money that that property is giving back to you, is going down in relationship to how much wealth you have. And we just basically call that term lazy money. Your money's not working as hard for you as it once was when you first bought the property. We have an entire video about this. We go into a lot of detail. Click the link right up here to check it out.
If we own real estate, should we sell, defer the taxes, and buy something that's much larger? Lauren, talk to us about the benefits of selling when the market is actually higher versus when it's lower.
If you're thinking about doing a 1031 exchange and selling maybe your 4-plex to get a 10-plex, the best time to do that is at the top of the market, because the leverage that you get from that trade up is highest when we're at the top of the market. So this is an actual case that we had, what was it, like 6 or 8 months ago. A client came to us. He had a 4-plex that was worth about $1.5 million. And he was able to sell that 4-plex for $1.5 million. And he could afford to buy a $4 million 10-unit building with the equity that he had. If the market had dropped and his $1.5 million 4-plex was suddenly $1.3 million, and that $4 million building came down like an equal percentage, he would not be able to afford it. He wouldn't have enough leverage for the down payment to afford that same building that he could have afforded when the market was high. So if you're thinking about selling, you've been considering trading up, the top of the market is the best time to do it because you will get the most leverage and you can get the highest property.
So this is a really important point, and thank you for explaining that. A lot of people would have the mindset of, okay, I do want to buy more units. I do want to own more doors. I believe in real estate, but maybe I don't want to buy at this, because if I sell at the top, I'm also having to buy at the top, right?
Yeah.
And so that prevents them from taking the steps forward. But what you're saying is that should everything drop, you may not be able to buy that trophy property that you once wanted. If
your property is worth $1.5 million today, you will not be able to afford that $4 million building until your property is worth $1.5 million again, because of the way that the leverage works. So if you want that $4 million building, you need to sell now at the top of the market to get there.
With that being said, if I'm a seller and if I'm fearful that some investors are pulling back, I'm going to tell them, don't worry. There's a line of people that want to get into real estate. And so for some of you who are thinking, oh my gosh, interest rates are going up, no one's going to buy, couldn't be further from the truth. Could not be further from the truth, because the higher interest rate is not keeping these investors away, because going back to, they're not buying this for 6 months, they're buying this for the next 10, 15, 20 years. And ultimately, where do you think the market's going to be?
So, is it a good time to sell?
I think it's a great time to sell. We are at the peak that we've been in. The potential of a 5% reduction has not happened yet. May not even happen at all. So if you were thinking of, I want to retire, I want to be out of management, I've owned these units long enough, I played the game, I'm hanging them up, of course you would sell right now. This would be the perfect time. Sometimes we get sellers who say, well, I want to sell, but I want to go into alternative investments. There's Delaware Statutory Trust, there's triple net, there's a lot of things that you could do. I would love to walk you through that. So if you're a seller thinking about, I want to get out, but I still want the cash flow, please reach out to me and I'm going to show you what some of our clients are doing to defer taxes, but continue that cash flow that you've gotten accustomed to. Now, if you're a seller, but you're going to continue being in the real estate game, you're an owner, you're going to continue owning, Lauren's point about lazy money is 100% correct. If you're going to be an owner, do you want to own, I'm making this up, $2 million in assets or $8 million in assets? If you own $8 million in assets, do you want to own 8 or do you want to be holding on to 16 million? Because through the tax referral benefits at the tax level of doing a 1031 exchange, of taking the money that you've made in one property, moving it to a next one, that is where tremendous growth is happening for real estate investors. The number one reason there are more millionaires in the real estate industry than anywhere else is because of this. The ability to continue trading up. The larger the asset, you're going to be owning real estate anyways. Why not own more doors? It's a proven point. It's still true today.
So we've talked about buying, we've talked about selling. Let's talk about the third option. If you're not sure, should you hold? If you have a good cash flowing property one, should you hold it? One
specific client, good friend of ours, said, I understand your return on equity report that you gave me. I understand that my money got lazy, but one, I'm happy. I know the tenants. I can walk to the properties. His motivation has changed. He's made his wealth. That specific client has made his wealth, and his motivation now is, I'm happy where I'm at. I understand that my money may not be maximized on a return. I'm okay with it. So when we're talking about holding, it all depends on who the individual is and what their motivation is. In that specific case, we're not going to force anyone to do it. We're going to show them through our reports that, your money could be making you more money. You could own more units, but maybe that doesn't matter. Maybe that's not what they're in it for. And a lot of the people got into real estate for a couple of things. I want to be able to retire. I want to have something supplement my income, and I want to have freedom. And once you get to that point, the game is done. Now, for some of the other folks that are still in the building wealth mode, the creation mode, there's a couple things. If you recently purchased your property, right now we would say from a return on equity that your money is working hard for you. So at this point, it may not be lazy just yet. We have to get to year 7, year 10. Again, watch our video where we kind of show you why that is. But in some instances, if you're a new owner on an investment property, you might stay put. Although there could be other alternatives that we could show you where you're like, you know what? I bought that 4-unit building. I'm ready for my 8-unit building. I see an opportunity and we can help you do that. So that would be that portion there. So to wrap up the holding stage of real estate, sometimes your motivation tells you that you simply want to hold. Other times you may not have all the answers or the tools in front of you. And that's where we come in, is let us show you where are you better off holding, or maybe you should consider selling and trading up. So please reach out to us.
So in summary, if you're considering buying, if you're wondering if now is a good time to buy, we say yes, because you should be looking at real estate on a 5 to 10 year time horizon. And we fully expect prices in 5 to 10 years to be up. If you're thinking about selling, the answer is also yes. If you're going to do a 1031 exchange and go up into a larger property, you can trade up into a bigger property when the market's high. And if you're thinking about holding and you're not sure what to do, please reach out to us. We are here and we're happy to help you.
So there you have it, our state of the market. Whether you're a buyer, you're a seller, or you're someone who's just simply going to hang tight and continue owning your properties. We've covered all the benefits. Make sure to like, comment, and subscribe. We appreciate you tuning in.